How would you describe the business environment right now in a pre-election season?
I think there are at least two factors that have conspired or are conspiring against the business environment in Nigeria. Before now, you would have thought that things were stabilizing, but the emerging market sell down as a result of interest rates rising in the U.S.
Yes.
Has basically put a brake on the stability or on the growth of the Nigerian business environment. And the second point is the one you mentioned, the elections, the preparations for the elections. I think there's a bit of anxiety as well as expectations as to who the candidates ultimately for the various parties might be. And so investors from around the globe are watching, and some of them have decided to take some of their investments out.
As a precautionary measure to whatever it is that might actually unfold in the coming months. Interesting times ahead for the country. Now let's just focus, of course, on Stanbic IBTC and the earnings this season. Now, what were the key drivers of your H1 earnings? Let's begin from there.
The key drivers of our earnings at 30th June 2018, one would be the non-interest revenue, where we saw a 34% surge. On that line, there are two items that report to the line. One would be the trading income, and the second one would be fees and commission. We had very good outing in trading revenue for the period, largely on the back of better flows on foreign exchange, as well as our very busy activities on government securities trading. In terms of fees and commission, our asset management subsidiaries came strongly to the party, and we saw a 32% growth in fees and commission. And of course, our investment banking business, as well as the stockbroking business, also delivered very, very strong returns.
Let's focus a bit more on your subsidiaries, really, and what really played out within that space in terms of how it really impacted the earnings this season. Just talk us through what really played out behind the scenes there.
The asset management subsidiaries, as you're aware, we have market-leading positions. So specifically in asset management, we saw a 14% growth in asset under management. That closed at over 3 trillion naira. And in terms of custody, non-pension custody, we also saw decent growth, 17%, and we had a 6.5 trillion naira number for the asset under custody. So basically, the growth in asset under management, very, very strong, saw to it that we recorded decent returns or decent earnings on fees and commission.
Care to share, did you think you did anything different this time to actually record the numbers we saw so far?
We continue to attend to the needs of our customers. Okay. We continue to deliver excellent services.
But you've done that. You've done that over the years, though. So was there anything different this time?
Yes, absolutely. We have an array of products such that when interest rates were rising, we had products to capture the attention of our clients. And in this bear market where the stock markets, are receding, again, we have different products. We have different products on currency. We have in even Islamic compliant product. So besides delivering excellent services, we have a wide range of products, both local currency and foreign currency. And of course, our brand, the fact that we are members of the Standard Bank Group, the biggest banking group of African origin, also ensures that we are able to attract different classes of clientele.
Let's just go back on the Islamic compliant products. I want to learn more about that.
So 200 million Nigerians, give or take about 50% Islamic. There is a segment of that market that are looking for products that they feel are compliant to their religious beliefs. And at Stanbic IBTC, we do offer some products, especially on the asset management front.
Clearly. Now, let's talk, of course, about, the structure of your loan book and, NPLs in this reporting period.
The structure of our loan book saw year to date, we posted a 9% growth on the loan book from 404 billion naira to about 440 billion naira. And split to currencies, about 45% was foreign currency denominated, and the balance 55% local currency denominated. The key sectors where we saw the growth would include the government sector, national sector of government lending, as well as agriculture and the downstream oil and gas space. In terms of the NPL ratio, we saw a slight deterioration from 7.9% to about 8.6%. That is temporary. The reason was largely on the account of two names in the construction and real estate sector, as well as in the communications and communication sector. Those two facilities, we are working assiduously, and we believe that before the end of the year, our NPL ratio will be below 5%.
Let's just get your outlook on full-year numbers, really, at the end of this year. And I like the fact that you mentioned, you know, of course, your customers do come first. You talk about the strategies you employed in driving some of your numbers up. Taking a look at this period at the end of the year, we're actually expecting, you know, a spike in inflation as well. Talking about the fact that, of course, once the money begins to roll out for elections, who knows, once money is being even released for the budget, these numbers will begin to change over time. How are you positioning yourself for what's to come? How are you positioning to make the best out of, many say, gloomy situation is already looking at us?
We are at Stanbic IBTC cautiously optimistic that we'll be able to sustain the momentum that you've seen. At the end of the half year, we saw our return on equity close at 43%. We are expecting that we should close at least above 35% for the end of the year. In terms of the NPL ratio, like I mentioned before, we expect to see that below 5%. Capital adequacy ratio remains very strong at 34%, 37% actually. And we expect that the liquidity, which was well above 100%, 122%, will remain strong. Of course, 180 odd branches nationwide. We continue to serve our clients from there. Several ATM machines, close to 600, POS devices readily available, very, very effective and efficient. So we continue to serve our clients at those locations, move them towards their ambitions, move the country towards our ambitions, and we believe that by the end of the year, our objectives should have been achieved.